Hello everyone, welcome back to this time YouTube channel. Following the budget speech, we have prepared a concise highlight of key proposals presented in Parliament. Today, we take a closer look at some of these initiatives and assess their potential impact on listed companies in the Colombo Stock Exchange. Let's dive right in. Accelerating digital transformation agenda. The government aims to fully digitalize all government payments by 2026 with a zero fees for QR transaction below 5,000 rupees. This initiative is highly favorable for banking, fintech and IT sector stocks. The shift from physical to digital payments is expected to increase digital transaction volumes, boost adoption of cashless payment solutions, enhance demand for fintech products, drive system integration and digital infrastructure investments. Bank and payment service providers are likely to benefit from higher transaction activity and improved customer engagement. Similarly, IT firms could gain from government digitalization projects, strengthening the overall sector growth and market sentiment. Bank and telecom counters are poised to gain once these proposals are fully implemented. Airport expansion and tourism boost. The expansion project of Bandaranaike International Airport is scheduled to commence next year, with 1 billion rupees allocated for development of domestic airports as well. This development is positive for construction and engineering companies, tourism sector counters, material suppliers. Expanded airport capacity will enable higher tourist inflows, improving hotel occupancy and overall tourism revenue. Meanwhile, listed construction firms may secure new infrastructure contracts, supporting sector growth and market performance. Support for migrant workers, housing and pension schemes. 2 billion rupees has been allocated from Sri Lanka Bureau of Foreign Employment to introduce concessional housing loan schemes for migrant workers, along with new contributory pension schemes. This proposal is positive for banking and diversified financial sector and construction sector stocks. Increased housing loan demand will support credit growth, boost in construction activity will benefit building material suppliers, pension scheme will improve financial inclusions and long-term savings. Higher deposit inflows will enhance bank liquidity and earnings. Rural infrastructure development is highly supportive for construction and engineering companies, building material providers. Large-scale public infrastructure spending ensures a strong pipeline of new projects and contract inflows for listed entities in these sectors. Expressway expansion. From the total road allocation, 66 billion is allocated for Phase 1 Central Expressway, Kadawatha to Mirigama, 1.5 billion rupees allocated for land acquisition for Ruwanpura Expressway, Kahatuduwa to Ingiriya section. This long-term expressway development will generate major infrastructure contract, drive demand for construction inputs, strengthen revenue visibility for construction, materials and capital goods sector companies. Support for SMEs, concessionary loan schemes. Funds have been allocated to provide loans up to 50 million rupees at concessionary interest rates for small and medium scale entrepreneurs, as announced by the President. This initiative is positive for banking and diversified financial sector stocks due to increased SME lending activity, higher credit growth and interest income, improved fee-based revenue from loan services, strengthening of the SME sector which support broader economic expansion. Additionally, enhanced SME financing can stimulate domestic economic demand, which may indirectly benefit consumer and manufacturing sector counters on the CSE through increased production and spending. These proposals are expected to stimulate growth prospects for companies listed under the construction, capital goods and material sectors on CSE. In this episode, We shift our focus to one of the leading players in Sri Lanka's capital goods sector, Access Engineering PLC, a prominent company listed on the Colombo Stock Exchange. Access Engineering PLC is widely recognized as Sri Lanka's most integrated and premier civil engineering and construction enterprise. It is also only greenfield construction company listed on CSE. Since its inception in 2001, Access Engineering has played a significant role in shaping Sri Lanka's infrastructure landscape, delivering a wide array of major construction projects across the country. The company's expertise span multiple disciplines including land, sea, air, transportation, as well as water infrastructure, telecommunication, energy, and housing. Through this diversified portfolio, Access Engineering continues to execute large-scale complex projects that support national development and economic growth. As a diversified business enterprise, Access Engineering has expanded its operation into other key segments of the economy, including property, automobile, and mechanical engineering. The property sector, which accounts for more than 50% of the group's asset base, includes approximately 1.2 million square feet of integrated logistics and warehousing space geared up to take advantage of country's ambitious plans to expanding transshipment trade. Approximately 1.1 million square feet of residential condominium space and over 350 square feet of Grade A office space in the heart of the city. Access Engineering Group is also authorized distributor for world-leading Isuzu, Jaguar, and Land Rover motor vehicles and is joint venture partner for the commissions, repair, and maintenance of port machinery with ZPMC China. Let's take a closer look at the financial performance of Access Engineering PLC. Access Engineering PLC demonstrated a solid financial performance during second quarter of 2025. The company reported revenue of 22.6 billion rupees, reflecting an increase of 5.2 billion rupees or 30% compared to the same quarter in 2024. This strong revenue growth translated into improved profitability, with the gross profit rising by 0.8 billion rupees, making 15% year-on-year increase. Profit before tax, profit after tax, and earning per share all followed a favorable upward trend, recording a growth of 9%, 11%, and 5% respectively when compared to the corresponding period in 2024. On the balance sheet front, total asset expanded by 5.2 billion rupees, representing a 12% increase year-on-year, demonstrating a company's growing scale and investment activities. However, total equity declined by 4 billion or 9%, primarily due to the utilization of reserves to fund strategic acquisition. During the quarter, Access Engineering acquired 95 million shares, equivalent to 33.33% stake in Harbour Village Private Limited, for a total investment of 19 million USD. As a result of this transaction, Harbour Village became a fully owned subsidiary of the group. While liabilities increased by 24% compared to the previous year, this reflects the group's active capital development towards expansion long-term revenue opportunities. Meanwhile, temporary decline in net asset value by 7% is directly associated with the acquisition and expected to be supported by enhanced future earning contribution from the newly acquired subsidiary. Over the past 5 years, Access Engineering PLC has demonstrated steady revenue growth, with the significant spike recorded in 2022 when the revenue reached 34.5 billion rupees, representing an impressive 60% year-on-year increase. This upward trajectory reflects the company's expanding project portfolio and strong contribution from property segment. However, in 2025, net profit contracted by around 5%, primarily impacted by fair value adjustment and higher operating expenses. Earning per share mirrored this trend, posting a 7% decline compared to the previous year. Despite of this short-term dip, in profitability, company has continued to deliver strong value to shareholders. Return on equity has fluctuated within a healthy range of 8 to 18% over the past 5 years. Notably, in 2025, Access Engineering achieved an ROE of 15%, underscoring resilient profitability and efficient use of capital. As of the first half of the current financial year, EPS stand at ₹2.54. For our forecast, we have applied a conservative assumption that the remainder of the year will deliver at least 50% incremental growth over the first half earnings, supported by the positive demand outlook stemming from the latest budget proposal favoring construction and capital goods sectors. With this approach, full year forecasted EPS is projected at approximately ₹6.35, which align closely with the company's performance in 2025. In terms of valuation, capital goods sector currently trade at an average PE multiple of 13.87 times, while Access Engineering trade at a similar earning multiple of 13.15 times. Investor sentiments towards CSE's capital goods counters remain constructive given the strong infrastructure development pipeline and improved earning visibility. If Access Engineering remains its current valuation levels around 13 times PE multiples, the implied year-end share price is projected to fall within the range of 80 to 85 rupees. This suggests an upside potential of approximately 24% from the current market levels, offering a compelling value proposition for the investors seeking exposure to Sri Lanka's infrastructure growth theme. As of the most recent reporting period, Access Engineering's net asset value per share stand at 37 rupees, representing a 7% year-on-year decline. Despite this dip, company's price to book value ratio has improved 1.79 times. This elevated price to book value suggests there is still meaningful upside potential as the market appears to be increasingly re-rating stock to reflect its robust fundamentals and future growth prospects. Looking at the technical picture, Access Engineering's shares are currently trading at ₹66.80. A key support level has been identified around ₹60, which could be act as a critical pivotal point for future price action. The RSI is approaching 70, indicating the stock may be entering to overbought territory, which precedes period of consolidation or pullback. Recent price behavior support this view. The stock seems to be consolidation phase around current levels, perhaps building a base for next major move. If the buying interest strengthens here, this zone could be firm up as a new support level, potentially setting the stage for the renewed upward thrust towards 68 to 70 rupees resistance band. On the other hand, a decisive break below 60 rupees could trigger a deeper pullback, suggesting a short-term correction. Access Engineering PLC stand out as a strategic investment supported by strong earning visibility, budget-driven infrastructure tailwinds, and attractive valuation. With a positive technical momentum and exposure to Sri Lanka's growth story, the stock offers both near-term upside and long-term value. We would love to hear your thoughts. Please comment below. Remember, always invest carefully and do your own research. That's it from this time for today. If you found value in this analysis, hit like, subscribe, and stay tuned for more market updates and insight. Thank you for watching. See you in the next one.